We've been talking about this for the last number of years, and it's the reason we started TractIQ. The biggest players in the space have the data. They have the resources. They have the insights. They are running circles around the rest of the industry. There is a reason why public storage, even in all of this environment, is seeing same-store NOI growth. It's why they have $600+ million under development when times are incredibly tough for development. It's why they are the biggest and the best in the industry, is because they lean into technology and they have data.
Well, Public Storage and Extra Space have now released their Q1 2026 earnings. Big question is, how does that matter to you? Why should you care? And I think we've got the perfect guest joining us today to talk just about that. He is the CEO of TractIQ, Noah Starr. I'm Chris Berg with Abernathy Development. Noah, it's great to see you and welcome back to the show, my friend.
Chris, it's great to be here. You're awesome. I'm excited to chat REIT earnings and storage and data, all of it. So it's going to be an interesting conversation.
Before we get into the earnings, I just want to take a moment and really just say thank you, because what you're doing for the industry has just been astounding. From the CMBS, I know you've got a big release coming in the next couple of weeks. And so it's just been really, really fun to watch. I mean, Wall Street Journal's now, hey, Noah, what's happening? So just kudos for you and thank you, man.
I appreciate it. And, you know, it's a team effort from Ethan, Marina to our entire team. And this stuff compounds, right? We've been talking about this for years and, you know, we're not even close to finished. And, you know, my hope is we're going to continue to make a ton of progress as an industry to make better decisions. So excited to talk to you more about that today and see what the REITs are up to.
Don't you have a bust of Warren Buffett on your desk, in your other desk?
And Charlie Munger. But I'm at a WeWork at the moment, so it's I don't bring it with. They're portable, but I don't bring it with me because that would be crazy.
But the only reason I ask is the fact that you say, "Hey, we're just compounding, Chris." Like that's what Warren Buffett would say, right? We're just compounding. So let's start here.
Unfortunately for me, I'm not going to Omaha this year. I've gone a number of times, but I know that's this weekend. So lots of hopefully good advice from the new CEO of Berkshire, and I'm sure Warren will make an appearance.
That was a nice little drop. I didn't know that, so I'll have to check it out this weekend. All right, let's jump into these earnings. What I'd love to hear from you is, what do you think is the single most important thing that jumped out of these earnings that people should know?
Single most important thing that jumped out, I think, you know, what's interesting is obviously Public Storage is leaning into their Public 4.0, the new operating portfolio and operating platform that they have, buying NSA, integrating all of those. They talked a lot about what that will do for their future earnings. And I think we've seen that for the last number of quarters around how they've just been running these stores a lot more profitably. So even if occupancy and revenue are kind of close to flat, you know, their expenses, they've been able to make some meaningful drops in their expenses, which has boosted NOI. And you compare that to Extra Space, where you haven't seen that same level of lift. So obviously the NSA acquisition, Public 4.0, trying to make a splash. I'd say that's how we'll probably remember these earnings compared to other quarters.
So then how do you translate, for the operator that's watching right now or the investor, how do you translate that into what it means for them?
Yeah. So I think we've talked about this before on some shows, but, you know, why should you care about the REITs? And even if you're a small operator, there's a trickle down effect across the whole industry. And, you know, thinking about the exit in mind, if Public Storage historically or Extra Space historically has been buying in mostly primary markets, you've seen cap rates in primary markets be a lot more competitive than in secondary and tertiary markets. Now, by buying NSA, they're everywhere, right? NSA is in secondary, they're in tertiary markets. So this was a huge move for the industry where, you know, in Waco, Texas, when I first looked at this market in 2021, 2022, there were 0 REITs. Now Extra Space is there. And I think there's some NSA brands in Waco as well. So Public Storage will make their appearance there most likely. So that is a huge ripple effect across the whole industry. And I do think it's actually, there's pros and cons to that, right? You can make the case where now there's more liquidity in the secondary and tertiary markets because you have a group like Public Storage that's there. But the flip side is it's now more competitive in those markets because in years past, you've been able to maybe skate by and you're not going after the REITs. Now you have Public Storage as your competitor across the street, and that can definitely change the operating dynamics.
I want to get into sort of the distinctions between the two in a moment. And before we do, I think what really stood out to me in the call as you're talking about Public Storage was how they kept talking about the platform, the platform, the platform. You're a tech guy. I just, commended you on what you're doing from a tech standpoint in this industry. When you talk about those secondary and tertiary markets, and then you put on top of that the WellTower JV, which I would love to get your take as a tech person. What do you see happening with the NSA and the WellTower JV? And if you're not familiar with what happened there, for the people watching, WellTower, very data centric. I mean, they're very robust on how they're going to utilize the algorithms and the data to go out and look at these, I believe, secondary and tertiary markets to really, because even within the earnings call for Public Storage, they talked about their micro strategy. So push back on that. What's your take and what's your assessment, for the next few years with that JV?
Yeah, so I would say a couple of things and how I'll break this down. So the first, for folks unfamiliar with what Public Storage did, is they partnered with WellTower to provide their operating performance data to WellTower, who is a standalone publicly traded company who specializes in transforming data into insights. And obviously, that is the most relevant thing in society today, is how can you use AI to generate insights? And it requires really good structured data
And
that
their
Public Storage.
focus is senior living, or am I not correct on that?
I think so. And
Okay.
this is their first foray into self-storage. But what I think is commendable about Public Storage is that they recognize their own circle of competence, right? Public Storage can operate stores really well. They can develop stores really well. They can underwrite. They can do all of these things. And there's a lot of work that's going to go into transforming all of these NSA stores into Public Storage, whether it's CapEx and brand and personnel and all of it, right? They need to stay hyper-focused on all those things. And by powering with a WellTower who's hyper-focused on deriving insights from data, right, it kind of, I think, is a really good example of they're trying to stay in their lane, in their circle of competence, while also taking advantage of the new technology that, WellTower is, potentially some of the best in the world at executing on. And, you compare that with most of the conversation about technology is how you can now build everything yourself. And Chris, you're an example. You're building everything yourself and it's amazing. And we want to empower you to do that. But there's trade-offs if you build it yourself, especially if you don't have the experience having ever done it before, compared to what Public Storage is doing, where no, they recognize they probably could hire people and train their people on how to build the best automated, data-driven investment process ever created, or they can jump the line and partner with the best already and then focus on their core competency.
So well said. So how do you extrapolate that again into investors, operators, and like what should they be paying attention to help them with their own assets, or if I'm going to be deploying capital?
We've been talking about this for the last number of years, and it's the reason we started TractIQ, right? The biggest players in the space have the data. They have the resources. They have the insights. They are running circles around the rest of the industry. There is a reason why Public Storage, even in all of this environment, is seeing same-store NOI growth. It's why they have $600+ million under development when times are incredibly tough for development. It's why they are the biggest and the best in the industry, is because they lean into technology and they have data. For the rest of the industry, I would also argue it's been heavily disrupted, where groups like a TractIQ layered in with all the new technology from, Claude and ChatGPT, et cetera. We want to level the playing field. And it's actually never been easier to level the playing field if you are curious and you take these tools seriously and you start using them every day. So even with everything I said about WellTower and the structural advantage that Public Storage has, it's also never been tighter. Like the operator now, even if you have 2 stores, you could get access to something unthinkable years ago.
Couple of theses I want to lay out and let you push back on. So one is I heard Brett Henry recently talking about the NSA PSA acquisition, and he said, "Look, I think that tells you everything you need to know about how people are perceiving the industry. It's obviously been a very, very tough past few years, but his thesis is saying, look, when they go out and spend $10 billion, they probably think we're close to the bottom." Do you concur with that?
Yeah, I mean, I actually have some slides if I can share my screen because I'm a data
Please.
person and, I can tell you all this kind of stuff. I'll start on this slide. You know, Public Storage reported same store revenue up 2.6%, and Extra Space reported same store revenue up 1.7%. We're still seeing web rate declines year over year. So Public, minus 3.8%, Extra minus 7%, and CubeSmart minus 6.1%. I believe they dropped their earnings today. But if you actually just think about the bottom, in the context of rates, we have been at the pre-COVID level rates for the last year or so. And, what that tells me is that the whole era of COVID, we've already been back to those norms. And if you also look at the treasury rate, you look at the cost of capital, that's been settled for a period of time, the last year plus. So I think if you look at the data, it definitely suggests that we have gone above the trough, and Public Storage making this acquisition probably, I imagine, will look back as they timed it really, really well, but it's really hard to know. And I imagine that in their underwriting, right, as they've said with their operating platform, they underwrote this to get massive lift from expense reduction, from brand value, from all these other things where the transaction probably works at today's underwritten rents, regardless of overall performance improvement across the industry. And that's why they're going to be successful. Uh, but, this is some data showing rates for all these REITs.
So the other thesis I was going to ask you about is, with now Public Storage having access to the NSA portfolio, and again, the WellTower data, my read is that they're saying, hey, we're going to really start to explore some micro markets within secondary and tertiary markets. Is there an opportunity here to almost be a Burger King to the McDonald's and just sort of watch where they're going in these secondary and tertiary markets and go, hey, they've done the data, now let me go buy some land or buy some assets in that particular marketplace and just sort of follow them and be the Burger King? Or what are your thoughts?
Hmm. I think that that's tough to do in practice. And I think it's all relative, right? Because, if Waco, Texas historically was a market you avoided, but now because of the REIT presence, you want to go after Waco, I think the capital is going to follow pretty quickly. And if not already now on bidding, right? So I find it hard to believe that 3 months ago you could buy a 7 cap in Waco, and today you can still buy a 7 cap, knowing that the cap rates are going to, like, we've probably already seen the compression in the market. I think what if anything this allows some groups to do is, if you thought 5 years from now you'd sell Waco at a 7 cap rate, maybe, that is now a more conservative estimate than if you were to think about it today. So if you bought in Waco 2 years ago or 3 years ago, or a year ago, it almost could be a really interesting time to see how values have changed. And I would encourage anyone who is in these secondary or tertiary markets, send me a message to see if, be curious to see if you're seeing this. But I think storage is a hyper-local business. Are you buying it correctly? Is the cash flow covering your proposed debt? Do the supply demand characteristics make sense? Is there, what are the occupancies and achieve rates of the nearby facilities with CMBS loans, right? All of that stuff still matters. And I would never underwrite with the hope that, oh, Public Storage is here, so I'll just overpay a little bit because they're going to bail me out on the exit.
But thank you for saying that, because I wanted to talk about it, and you gave me an opening to do that. So, everyone's talking about the Sun Belt. We'll get into Extra Space here in a moment, but even Joe Margolis saying, hey, it's been rough there. It was oversupplied. We've heard Phoenix, just getting mauled because of oversupplied. Yeah, we've got an asset right now in Phoenix that's more than doubled what was proposed by Public Storage for the budget. So like you just said, it's a very neighborly business. And if you can find the right asset in the right neighborhood, it still can perform even in markets that you're being told are being crushed.
I think this slide is pretty timely to your question. And, I'll just show the data. So this slide is showing the 10 by 10 non-climate web rate from Q1 of 25 to Q1 of 26. And we looked at public, extra, and cube smarts rates. And you can see in the Sun Belt, even this year, right, rates are down almost 15% blended for public storage relative to the Midwest and coastal cities. So I think we're still seeing, to the point I made earlier, it's a hyper local market business. You can find something amazing in Austin, Texas, still right now. But the overall trends in Austin, Texas, where we are, and a lot of these Sunbelt markets are still in a recovery mode because we've had so much oversupply of storage. And in Austin, we've had so much new housing. So we've also seen multifamily rents became, it's funny, way more affordable, which, flipped the framing in the news of rates being, getting crushed in real estate. So yeah, I'd say that the Sun Belt is still facing lots of challenges, and these cycles tend to take years, right? They don't get fixed as quickly as some might like.
Anything else in your presentation that you want to share with us you think we should take a look at, or you want to go through it?
Why don't we see here? So I think, to dive a little bit deeper into the Sun Belt, then this is looking at public, extra, and cube kind of between Sunbelt, Midwest, coastal, national, etc. And you can kind of see how for it looks like public storage has had just the largest decline in their web rates across the Sunbelt. But if you look at, them as a nation, they're still, they're only down 4%, right? So a lot of other markets are seeing a lot of good recovery in the web rate, in the street rate. And even if overall rates are still down, that's been dragged a lot by Sunbelt. So still a lot of markets in recovery. But let's see what else I put together here. I think this is kind of the conversation that we had earlier. I kind of looked at the CMBS reported facilities in 2023 versus 2024, and public storage has continued to be the brand that's improved the most across their NOI, and this has continued into 2026. So I thought it was interesting to see that from a historical perspective. And yeah, obviously creating these slides has never been easier, but this was some data that I was putting together.
So with that being said, I'm going to ask Eric to bring something up for us. Eric, if you can bring up the 2 operating philosophies graphic, hopefully you can do that while you're still sharing. But so I want to take on this as Eric brings that up. And I think one of the other things that really jumped out to me is, and we have talked about this in the past, but it's pretty abundantly clear to me that PS is again saying, hey, we're going all in on a platform and we're going to utilize tech to drive our NOI. We're Extra Space. You mentioned expenses are up. They're still quote unquote heavy humans, which both potentially could quote unquote win. Which one do you think gets the greatest returns over the next decade?
Oh, that's a tough question. I think,
what thesis do you like the most? And if you were the CEO of Extra Space and are like, which one you're like, oh, that's the thesis I think wins?
I would say that the new leadership at Public Storage has made a splash. No doubt. I think there's an energy around what they're doing. There's clear strategy, clear direction, clear communication. They're leaning into technology, whether it's operational technology through their platform or investment technology. They are obviously swinging for the fences with the NSA acquisition. So there's a lot, I think, to be excited about at Public Storage. At the same time, Extra Space, has an incredible business at platform as well. And I think my read is that Extra Space, even if they're not announcing a WellTower partnership, they're doing all of those things in-house. And they have been doing all those things in-house for a long time. And, you know, when you are a new CEO and you want the market to take you seriously, to trust your leadership, to be excited about the vision you're selling, it makes sense to announce all of these things. But also, when you announce all these things, everyone now knows what you're doing, versus Extra Space has been doing this a long time. They have a great leadership team. They have a ton of advantages. They have scale. Their third-party management team is outstanding. Their bridge lending program is massive and dwarfs public storage. They haven't leaned into development nearly as much, which makes them, I think, a little bit less risky, where they have all these third-party managed stores. That's pure profit, no risk really, and they don't have a lot of development risk. So I think there's a lot to like about what Extra Space is doing, but they're just not going to get the headlines right now because of the new leadership shift at Public Storage. So, I don't think I'm going to publicly pick a side on this call, other than saying Public Storage is a customer of TractIQ and Extra Space isn't. So whatever, however that sways me, I'll let that speak for itself.
No, that was good. I think that was a really fair analysis. I think both are going to have strengths. It'll be interesting to see because, in prime example, Joe Margolis to say, "Hey, look, we've got 30% of our clientele that never touch us on tech, right?" And I even had a woman on LinkedIn when I posted about this was like, "Anyone I see right now that's cutting headcount because of AI, I'm not a customer," right? So I think we're going to see how this thing plays out, and obviously everyone here is solving for NOI and FFO for their shareholders. So I don't know how much you can tease here, if you will, Noah. But first off, anything else you want to share on the earnings aspects or your thesis of the business for the next couple of years?
Yeah, I would say, this quarter is a huge shift in self-storage, and Public Storage is the best example of that, right? We've been talking about AI and technology for the last number of years. Public Storage is doing it right now at scale, larger than ever before in this industry. So if you haven't been taking that stuff seriously, you really should. And I think it also will impact Extra Space, and it will impact SmartStop and CubeSmart. This has ripple effects across the whole industry. So I think we're going to start to see more and more companies announce partnerships and initiatives like this and have some of their assumptions tested. And I've talked to a lot of the biggest groups in the country, and there are certain ideas that they've had for a long time about how performance is impacted by things. But now you can go see that in 5 minutes, and you can test things that you've never been able to test before. So what are we going to learn from all of this new technology? I think we're still scratching the surface, and this is probably the quarter where the industry really supplanted itself as we're taking this seriously, and if you're not, you're going to be left behind.
So with that being said, how much can you tease or share about a release you have coming out here in the middle of May?
Yeah, I would say on May 12th, we're doing a webinar, and I would love to have you on a webinar, in the coming months as well. But John Lindsay is going to present his newest listing that I don't think has been out yet. I think it's going to be a pretty nice sized portfolio. He's going to present it, and we're going to underwrite it like in a way that's never been possible before. And I spent years in the institutional investment world. I started my own investment company. I've built models. I've built memos. They would take weeks, and you would get nits back, late emails. The whole culture of the deck takes a week, and it's a crazy kind of thing. You can now do that in 20 minutes, and it's a better memo than we would have built in a week. And we're going to kind of show how you can do that now using not just Claude, but something else that I think has a lot of our customers really, really excited, and our team really, really excited. So I encourage everyone to join on that webinar and check out my LinkedIn posts because I'll be teasing it, over the next week or two.
One of the things that also really jumped out to me in the earnings calls, and it was more prevalent, I think, Noah, in the Extra Space earnings call, but Joe Margolis was very clear, like, look, we have not seen demand go down at all, even with oil prices going up and things that are happening from, inflation. You saw Powell yesterday keep the rates where they are. But it was really interesting to me to say, hey, demand is pretty normal right now, and it's allowing us to keep our ECRIs in place. I guess I share this with you. When do you think the housing markets, and I know this is a guess, but when do you think the housing market unlocks to increase demand, which we'll talk about here in a moment?
I said this to the Wall Street Journal, but there has never been a period in American history where more people have used self-storage than today.
Then I'll share with everybody this. If you do yourself a favor and go check out storagedemandscore.com. It's powered by TractIQ, and it's a really powerful tool. We're going to make it even more robust here because there are some regional things, but this has all been based on an equation from the Self-Storage Association. You can see the equation here, but everyone in our industry is talking about supply, 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 which, oh, by the way, also good news from these earnings calls. Both companies saying, hey, we think supply is now going down. It's so tough to develop right now. But no one really talks about demand, and that can give you an extra sort of buffer margin of safety as an investor, as a sponsor, to make sure that when you go develop and are going to buy an asset, there's actually demand in the market. So we're looking at what the SSA has said about demand from households to usage rates. As Noah just mentioned, usage has never been higher. The average for a household is 125 square feet. We run that through a formula here. All you have to do, and again, thank you to TractIQ, put in an address, what you think the projected size of your project's going to be, hit this blue button down here, and it'll spit out an actual demand score for you. It's not the only thing you want to look at as you underwrite, and yet it's at least going to give you a metric to kind of go, okay, there's actual demand and desire for the project and or the product that I want to put in this marketplace. So, all right. So, no, we want to say thank you. We appreciate you joining us. And it's the Self-Storage Report. I'm Chris Berg with Abernathy Development. Definitely share this with your colleagues, your friends. Obviously, great information coming from Noah. Does an outstanding job. Do yourself a favor. Yes.
Thanks for having me. I'm sorry about the Wi-Fi being spotty. I have no idea what's happened, but yeah.
Definitely check out
You guys already know what I have to say.
TractIQ.com as well. And just let Noah know, hey, we saw you on the pod. If you want to find out more about what they're doing there, they've got a huge release coming in the middle of May. If you're into tech, it will blow your mind. They've given me a chance to take a look at it, sort of a sneak peek, and it has been phenomenal what is happening right now with what they're about to release and some things happening with Claude. So again, I'm Chris Berg. This is the Self-Storage Report. We'll see you back here next week. We've got Brett Henry joining us from Trojan Storage.